So welcome everybody. Thank you to all the speakers for making time for this session today. Thank you to everyone who's joining us as a listener and as a participant. My name's Helen Disney. I'm a director of the Realisation Group and I'm going to be your moderator for this session. We're going to be talking today about how a digital pound could potentially facilitate financial inclusion, which I think is a really important and really interesting topic. We've got, I think, at the last count, over 90, maybe even 95 governments around the world exploring the potential for a central bank digital currency, including the Bank of England in the UK looking at exploring how we might have a digital pound here in Britain. And I think one of the perceived benefits of a digital currency is obviously that it might somehow be able to bring about greater financial inclusion, whether it's through delivery of welfare services, whether it's through other benefits that we might have through being able to have a programmable form of money. So we're going to be looking at, what do we mean by financial inclusion, including digital inclusion, not just access to money. But, some people may not actually have access to the digital world at all, and how can we deal with that? We're going to be also talking about some of the different challenges and implementation issues around how we could actually design this in to a central bank digital currency. So really delighted to have such an amazing lineup of people here. I think we've really got the creme de la creme of people who know about the tech side, who have worked on financial inclusion, who are potentially implementing different solutions for this around the world. So I think we're going to have a fantastic discussion. What we're going to do first is hear from Richard Ells, who is the founder and CEO of Electronium. Welcome, Richard. Richard's also a board director of the Digital Pound Foundation and has been there since the inception. So Richard's going to kick us off with a sort of 15-minute overview of the topic and speak to us a little bit about his background as well. And then we'll move into a panel discussion featuring all of the other speakers who I'll introduce a little bit later on. So I'm going to now hand over to Richard to take you through, I think, a big picture overview of where we are when it comes to financial inclusion and central bank digital currencies.
Thank you, Helen. Much appreciated. The guys at my office have very kindly made a wonderful little presentation. So I'm normally used to just waving my arms around and chit-chatting. So I'm Richard Ells, CEO of Electronium, and more recently one of the founding members, along with Quant and Ripple and a growing list of other people, of the Digital Pound Foundation, which seeks to support the implementation of a beautiful and very usable digital pound. So my background is in tech, and my passion has been this Electronium project, where what we literally have designed from the ground up is a tool to try and enable some financial inclusion. So my wandering speech probably won't go along exactly with these slides, simply because I normally just meander off topic. But why are people financially excluded? I think a lot of the time when you're talking to people that are in the global north, they don't really understand financial exclusion in any way, shape or form. But actually there's vast swathes of the world who are excluded for lots of different reasons. Could be political, could be any of these. We've got location of limitation, ID, credit history, all sorts of things. In the global north, you see people excluded from banks, but you also see in the developing world, people excluded from technology as well. If you've got subsistence farmers, they may well have access to zero technology. And largely, of course, these digital economies that we're talking about at least rely on some form of technology to deliver them, nearly always mobile. So right, what do we got? We've got 1.7 billion people under financially served. Now, just getting them into having a bank account isn't the answer. Just getting them into having a digital form of payment isn't necessarily the answer either. We've seen it with the likes of M-Pesa, although that was a very successful project. Just rewarding someone for setting up an account doesn't mean that you're going to get account usage. So you have to empower people in a way to actually get them out of the existing system into something new. Now, for the global north, and again, I talk about that as the developed world, however we want to call that, we're very used to digital ways to pay. But in the developing world, digital ways to pay are actually fairly new and quite exciting. And what you tend to find is that the developing world has this ability to skip over technologies and move faster. So lots of countries are only implementing 5G tech or 4G tech. They didn't bother with 3G tech at all for mobile phone networks. So whilst we are going to talk about, and we've got other people such as Victoria here today who will speak much more about, for instance, UK unbanked people and people that are financially excluded within the UK. My experience has largely been on the global issue of being financially excluded, which often means you're literally hundreds of miles away from a bank and you have no digital way to pay at all. And that's what I believe, and we can see, is going to facilitate these people to actually join in a global digital economy, even though they're distant, is mobile phone technologies. It's becoming more and more accessible to people. I would also, a slide that's in here, they're talking about the fact that it costs people more if they're outside of the existing banking system. The traditional banks are not particularly forthcoming in wanting financial inclusion. I think they like the status quo exactly as it is. They are not massively incentivized to include new people. And the new people, as they see it, are not necessarily high earners for them. So they're excluded. And that exclusion doesn't just cost them their banking, also it has many other repercussions for them in terms of their costs. Okay, so one of the things we're going to talk about in a moment is regulatory environment. The digital world, be it both cryptocurrency and CBDCs, these digital currencies, central bank digital currencies that we're going to talk about, the regulatory environment is still not crystal clear. And the more the regulatory environment becomes crystal clear, the easier it is for companies to implement technology within it and to utilize that, and for people to utilize it. But also, it's really critically important that that regulatory environment doesn't just reflect our existing status quo system. We have to try and encourage it to be more financially inclusive. And that is very much part of why I'm involved in the DPF. Okay, so no barriers to entry. I think probably everybody who's watching this already gets that physically going into a branch and opening a bank account, or even opening online bank accounts, is all fine and well and good. And the same thing will be true of CBDCs. Getting hold of an account within cryptocurrency is particularly easy, and it will be indeed, hopefully, for CBDCs. What we saw as a company is the critical part of financial inclusion is not just to give people access to a wallet, but also to give people access to a new way to earn. And I think that's where we will start seeing the world change in terms of what people are delivering to this whole new marketplace. So this figure, somebody at the office came up with, Jonathan, I think. Thank you very much. So the world is moving towards a digital environment. And you've seen Facebook changing their name to Meta, and this word metaverse being thrown around. If you've seen any of the popular culture movies, or indeed read the books, hopefully you've read the books. Ernest Cline, for instance, wrote a great book, and Snow Crash was a great book. And they are starting to talk about a new way that people interact, which is through this idea of a metaverse, a digital coming together of people. And the more we start to move towards a digital environment, the more that online, the more that digital economies and digital ways to pay will be more and more important. So the example we've given here is ours. We've created a platform called anytask.com, which is gives people the ability to sell a freelance service, so a digital skill. I think we've got about 28,000 people on there selling digital skills. So you could do logo design or any kind of design, coding, all sorts of things. You can sell it online. Now, this isn't the only one of these. There's lots of them around. But the critical part is that so many of them, virtually all of them, in fact, if not all of them, are powered by the status quo. They're powered by the existing banking system. And as such, that excludes vast swathes of the world. And these people are coming up. They may not be the bottom rung of those societies in terms of poverty, but one or two rungs up that ladder, there is people, especially a younger generation, who are quite tech savvy. They've got a laptop, they have this hunger and passion for digital, and yet they've got nowhere to sell that. So we've created that platform here, but we're not going to be the only people. This whole marketplace is going to change and shift the digital economy. The whole globe is going to start coming together. as we realize that you can buy information and products from anywhere in the world, and you can work with anyone in the world. So we're not the only people. We've got this platform that enables people to buy with a fiat currency. If you're in New York or somewhere, you can buy a freelance service with a sort of credit card, which is one of the many ways to pay in the global north. But somebody who delivers that product may have literally no way to receive a payment. PayPal, for instance, might not work in that country. PayPal have excluded, I won't name them specifically, but there are some really big countries that you definitely would have heard of where PayPal have said, no, everybody from that country is a criminal. So we're going to exclude it. Totally unfair, totally wrong as well, I might add. And in those countries, there are tremendous skills, and they become available to the global economy when we unlock it with digital ways to pay, which we've done with Electronium and ETN. But CBDCs are going to change it further still. Now, this slide talks about KYC, and this is really important as we start to talk about the regulatory environment. KYC means know your customer. Again, that status quo banking system of work within a regulatory environment that is robust, which is great. We want to avoid money laundering. We want to avoid terrorist financing. Those things are critically important that we control and make sure we stop it. But at the same time, what you don't want to do is create an environment that totally locks out the people from joining this digital economy revolution. And so there has to be a balance. And this is where our input into the design of a digital pound is, we feel, is important. If people have access to something like a digital pound, they will be able to earn. And we have found already that people do like to earn in crypto. ETN is a pure crypto play, so it fluctuates in value. It's not stable. But at the same time, what we found is that they actually like to do this. So their own fiat currencies often fluctuate quite a lot. I mean, you'll have seen Zimbabwe and countries even closer to home with huge inflation rates. And so they're quite used to, the people there are quite used to seeing currency fluctuations. And what the crypto industry does is fluctuate pretty wildly. But it would be great to have both the ability to get into that crypto market if people choose to do so, because they like the fact that there is also upside. There's downside too, of course, downside risk, but there are both. They like that. But at the same time, you want something that you can put your earnings into, something that will be completely locked into a stable value. And this is where a very stable coin, and I say that very specifically, and I'll explain why in a second, will be really powerful in the global market. So if somebody does this right, if the CBDC that gets this just right, will be a hugely powerful tool around the world. And it can be the British pound, can be a digital pound. I say stable coin because there are lots of people out there that are trying stable coins. If you've been following the cryptocurrency markets lately, you'll have seen an absolutely horrendous situation. There was a stable coin called UST. It has dropped 99% of its value. Anybody who had that and got their savings in it has basically been wiped out overnight. Now, this is a terrible thing, and the market within it is largely unregulated. Regulatory environment is starting to develop, but it's a pretty awful situation for anybody who lost their value. So we need to make sure we do it right and not do it anything like that. Now, here we're still talking about us a little bit, right? We've got millions of users. That's where our knowledge comes to push into the Digital Pound Foundation. So we say here, not all of these digital currencies will be created equal. And if you imagine the trust that the Bank of England have and the various central banks around the world have, a central bank digital currency can be a good thing. I'm not saying it definitely will be a good thing because they could do it wrong. Now, the Bank of England are more likely to do it right than anybody, in my opinion, because what they are doing is they are listening, they are watching, they're not rushing. There are lots of these projects that have already launched. They have largely been rushed to market. And I think what the Bank of England's stance is very clever. They are standing back. They're watching what takes place. They don't want to be left behind, but at the same time, what they want to do is make sure that they get input from all of the people that can give them great input, and they can get this right. And when they do, and I'm sure they will, it's going to be a tremendous success. And it can be a tremendous success much further than the shores of the United Kingdom. or central bank money, there are multiple versions. Okay, so we're already seeing multiple versions of US dollar stable coins. That doesn't mean they're a central bank digital currency, but you might well see other digital pounds, and not all digital pounds will be created equal. It's very important how we look at that. And it's very important how the perception of the marketplace, the people that are using this, understand that something truly has robustness as a form of holding value. So again, in terms of guiding this project, it's pretty obvious it's got to be that, but do be warned, be careful what you get involved in. It's a very young economy. The digital economy is a slightly scary place to bounce around in. So there's going to need to be some training, because this trust that is built from digital pound, for instance, suddenly could be used by nefarious people to try and attract people into scams and all sorts. We've seen it with Bitcoin, and we've seen it with all sorts of things in crypto. So teaching people and making sure that people understand how to use these things is going to be critically important. Here's a slide. Interoperability. Haven't really covered it, but it's really, really important that the digital pound can interoperate with whatever it may be. So it's going to be great for sending payments around the world, but also people are into the crypto market. So somebody's going to need to be able to trade that into crypto and out of crypto. This is where it comes into all sorts of difficulties with KYC, AML, but it can all be overcome. Digital ID is a highly controversial topic. I believe strongly in creating blockchain-based digital ID that's trusted around the world, but then you're having to trust a third party somewhere else, and no governments are doing it. So everybody is asking for these KYC documents individually, which causes a huge problem in terms of the amount of places that your identity could be stolen from. So we need to get that right as well. I'm nearly at the end, I promise. Legal and regulations, I've already covered. It's so critical that we get this right. Super important. And training. If we can get the training right, then people will use it. So I think I'm probably at the end. I can see I've got a little bit of a countdown going next to me. So I don't want to overrun and break into other people's time, because the people that are on here today are highly knowledgeable people, and they have so much to share that I really want to get into the open forum part where we can all chit chat. Thank you for your time. Thank you for joining us today. I'd like you to say hello to everybody else as we go live. And I appreciate you taking the time to listen to me waffle on for a little while. Thank you very much. Have a great day, everyone.
Thank you, Richard. It definitely wasn't waffling on. I think you made some really important points, and I think the slide that you finished on is the key thing, is we can actually change people's lives, because we have a responsibility as a society to include everybody as the world becomes more digital. I think, that's a moral imperative, but I think also, if you think about the people that are using your platform, the tasks and the skills that people are offering would be skills that we would be missing out on if we didn't have some of the digital tools and technologies we've got today. This in a bit more detail. We've got 4 panelists with us today, and we'll also hopefully bring Richard back in when we come to the Q&A at the end, so that we can hear from him a little bit again at the end of the hour. So just to introduce all of our wonderful panel, and if you might like to put your cameras on now, panelists, we have Sophie Blackstad here with us, who's CEO and founder of Hive Online, Dr. Estelle Brack, who is the chairman and founder of Curality, I should say. Susan Friedman, who's head of policy at Ripple, and she's also the chair of the Digital Pound Foundation. And last but by no means least, Victoria Thompson, who's the founder of Aurora. She was also heavily involved in the founding of the Digital Pound Foundation, and she also works as part of the law firm Ashurst Digital Economy team, and she's done a huge amount of work around financial inclusion in the UK. So really wonderful to have all of you here. I wanted to just kick off by turning to Sophie. Something that has actually already been mentioned in the questions, and I think will come up again, is the issue of know your customer regulations. It's something of a burden in some respects in regard to how we include people and how we design in financial inclusion into a digital pound. So I would love to hear your thoughts about sort of the policy drivers and the experience that you've had around that topic, and how also, I know you work in a lot of developing economies. How do we make sure that having a digital currency, a central bank digital currency, won't exacerbate the digital divide?
Thanks, Helen. Yeah, it's it's a really difficult question for regulators because there is a sliding scale between complete openness and allowing anyone to participate, which means basically no KYC, in which case you could be, as Richard said, letting in the terrorists and the criminals, or making it so tight that you don't include anyone. And this is also a design issue when it comes to deciding on the structure of your digital, particularly CBDC. Is it going to be something that the central bank issues? Is it going to be something that is issued through the commercial banking system? Or is it something that's going to be issued more broadly through fintechs like us as well? So, for example, if it's going to be through the commercial banking system, then banks will want to perform the high grade of KYC and AML that they do today. Whereas fintechs may be able to lower the barrier a bit more, as we've seen with M-Pesa in Kenya, the first real sort of widespread digital currency. In our case, we work with people who have very little in terms of identity, in terms of digital history, often don't even own phones or have any connectivity to the internet. And we're mainly replacing paper with technology in the communities that we support. So I guess starting right at the bottom end, we replace, or we have sliding scales of KYC depending on how much identity people have. So rather than having a bar that people have to jump over, we lower the bar to the point where nobody has to jump, but then we restrict the amount of services that they can access based on the level of risk associated with the level of identity. We also use social structures, social dynamics as part of our identity management. So as well as more traditional forms like do you have an address, do you have an age, none of our customers have an address and most of them don't know how old they are. It's also, does this person know you? Does this authority figure recognize you as part of the community, etc.? So there are other things you can do. And actually what I quite like is, as we've seen with the digital, the sand dollar in the Bahamas, is that they've got a sliding scale of how much you can access based on the level of identity that you can provide. I think that's a practical, quite elegant solution. Obviously, I think that because it's what we do. But that is, I think, the most inclusive solution that a CBDC can implement. Whereas having a single bar means that lots of somebodies are always going to be left underneath that bar.
Yeah, I mean, I think it's fascinating now that we think about digital identity, and it does tend to be assumed that it has to come from some kind of, government issued ID or some kind of traditional means, and that we're now finding that there are so many more ways that we can actually give people a digital identity. So that's obviously a key part of a lot of this is we need to somehow know who a person is. And if we can find more sophisticated ways of doing that, then obviously it opens up a much greater set of options. And equally, as you say, that the risk can be mitigated perhaps by offering different levels of access. So, it's not a one size fits all solution, I think, for this. And maybe that's the starting point. And great to hear about what you're doing, and obviously working in quite challenging circumstances. So I hope some of these people designing a digital pound are going to be taking some advice and experience from you as they look into this.
Yeah, well, I'd just like to add, I would echo what Richard said, is that although you don't apply this to the Northern Hemisphere, there are people who lack literacy and digital identity in the UK as well as elsewhere. So it's not just an African problem or a Southern Hemisphere problem, definitely.
Absolutely. And I mean, someone actually said to me the other day, isn't this just really more useful for developing countries? Why do we really need this in the Western countries? But I think, there are many things that can be done. And probably it's the good time for me to bring in Victoria because, one of the questions is this actually necessary through a digital pound or through a central bank digital currency, or could we achieve financial inclusion in some other way? You've worked on this a lot, and perhaps there's a sense that people feel this is not a market worth solving for. So I'm interested to hear from you on that.
Thanks, Helen. I think for me, in a country like the UK, there is a big part going back to that identity theme, where if we did have a digital ID scheme, then that would enable people to generally get into a banking system as the way it works right now. That is one of the biggest barriers to stop people getting access to a bank account because of the approach we take to the rules and regulations around account opening, and that is a big problem. So for a segment of the market, that if we had a different approach, that could solve for them. But there are many reasons why people become unbanked, and I always find it really interesting in the fact that when we talk about CBDCs, we tend to forget how money works now. And you can get hold of money and you can use and transact money, as in the coins and the notes that we have, without quite often having to prove who you are once you've got it in your hands. And so I think with KYC and identity, we have to go and look at really what are we trying to do with that law. We're trying to stop certain types of behavior and certain types of actions. And maybe if we focused more on the behaviors and the actions and less about who that is, because that's what we care about. Is that money being used for a certain purpose? Is there a certain action that's being done? And if we start to look more at that, I think then it becomes easier to solve the inclusion points. And I think that sliding scale point is a really great one, because we have governments that give out prepaid cards, and over an insane amount of money is distributed in aid through prepaid cards. And that is piggybacked off the fact that you have either a local authority or you have a government entity that is prepared to say, no, I'm going to give this to this person because there's some element of trust within that system. So a lot of people right now are stuck in a world of prepaid cards, prepaid meters, and that creates an insane amount of cost into the financial system for those people. And I think what's really a great opportunity, if we design a CBDC in the right way, we can create an infrastructure which is better for that segment of the market than existing solutions. And that's what we worked on in Aurora during the pandemic. We looked at basic tokenized wallets using the equivalent of a what people would say a stable coin like model to show how you can get money to people who really need it. And I think more and more of what's going to be done through the Bank of England working groups and the various pilots that will shortly be announced with Bank of International Settlements and the papers that are coming out from the Boston Consulting Group with the Payments Association working groups that they've got there, we will start to see how we could think about creating a digital rulebook and a digital architecture that allows, through open banking, different models and ways to solve for this segment of the market, so they don't have to be in this expensive prepaid world.
Yeah, I mean, I think people don't often realise the sort of staggering costs of being poor, if you like. I mean, I think you mentioned some figures. I don't know if you've got them to hand, but what it costs to be
I mean,
unbanked in the UK. But
in the UK, just the average annual cost of just being unbanked, and by that not having a current account in one of the big banks, is £2,500, and that was pre-pandemic data. So when you think about what the cost of living crisis is going to do to that, and the inflation rates that we've got in the UK at the moment, if you want to talk about levelling up and you want to talk about really solving and putting money back into people's wallets, literally getting them included into the financial system would make a massive difference.
absolutely. And I wanted to bring Susan in here because obviously your domain is policy and regulation. There's some degree of a lack of clarity around all of this. But not just in the UK, but in other countries. How do you think that CBDC can be sort of made to play a part in this regard? I think one of the questions that came up in the chat was partly about governance. How do we take sort of the politics out of it, if you like, and how do we make sure there's checks and balances so that if there is a digital pound or a digital euro or any other digital currency, that it is for the benefit of the people?
I thought the question was a great one, and I think the Bank of England is tackling it in the right way through their engagement forums, both on the tech side and on the policy side. I purposefully tried to bring in a wider group of stakeholders to discuss what the various issues are, how CBDC can be designed to be well implemented. And I think that's the first step. We're seeing the same thing in the United States. The Fed is about to close a consultation on CBDC. And I think the fact that these central banks are having consultations, engaging the public, legitimizing the idea of a CBDC is really the first step toward bringing it to achieve the goals that were just outlined by Sophie and Victoria. Because once you can, I think once you have that stamp of approval, once you start to put the framework in place, you start to figure out how do you achieve that sliding scale? How do you get CBDC to more individuals? And I think it's about continuing to make the conversation as inclusive as possible so that you hear from the people who this affects and what they're looking for and what our institution should be thinking about.
Yeah, absolutely. And I think what's interesting about this whole conversation is, there is so much experimentation going on around the world. And one of the participants was saying, why are we talking about different countries? Because we're meant to be talking about a digital pound. But I think for me, having come from a public policy background before I got involved in the kind of world of digital assets and blockchain, I think cross kind of national and international collaboration on policy is one of the most important things that sometimes gets neglected. Because look at what Sophie's doing, look at what Estelle's doing, look at what Victoria's already tried, look at what different countries have already learned, and sometimes we don't actually share that best practice between different countries. And if we did, we would probably save a lot of heartache and money and time by actually designing things in the right way from the outset, by getting the principles right and not leading to other hurdles further down the line. So I did want to now come to you, Estelle, because you've done a lot of work in Africa, and obviously it's a different environment from the UK. But one of the things that we see in places like Africa is that often, because we don't have legacy systems, you can leapfrog. So Africa has famously mobile money, and perhaps there's no need for this in Africa because people already have ways of payment that are sort of efficient and simple. So what would a CBDC add? How would it sort of add value above what's already there?
Thank you, Helen. I definitely think that one of the major, more interesting use case for CBDCs is Africa, or really unbanked countries and continents where actually, yes, electronic money is provided by MNOs. So electronic money issuers, but still they are not banks. And this is solutions are quite not that easy and to use, not that simple. At the end, I'm struggling with Orange Money and trying to top up my account without using cash. So it's not that easy. And on the other side, it's mainly with high volumes of transfers and users. So it's mainly transfers. That seems to be a problem in Africa, and that MNOs that don't find the solution to move from transfer to payments. And so I think one of the reasons are trust. People don't trust financial institutions in general, including electronic money issuers. So I guess that CBDC issued by the central bank would be an issue or a solution to put more trust in the system.
Yeah, and I think that comes back in a way to the issue that Richard raised at the beginning, and do feel free to kind of jump back in, Richard, on this, which is stable coins. So, perhaps the role of a central bank digital currency is to be a stable coin, a truly stable coin, as opposed to some of the privately issued ones that may not be actually that stable. And I know people in the cryptocurrency world have some concerns about central bank digital currency because they think it will sort of destroy cryptocurrency, but I'm not necessarily sure that's the case. I think, the role of a central bank in a way is to provide trust, and that's why these rules and systems have built up over many years of our economies and our society, and we still need that trust function to be able to interact for certain activities that we have. I'm not sure I'd want my welfare payments necessarily paid in a cryptocurrency, and they might suddenly be worth 50% more or 50% less the next day than they were the day before. If I'm on a very low income, I'm not sure I'm going to want that. So what about stable coins? I mean, feel free, anyone, to sort of stick a hand up electronically and dive in on this one.
We go after you, Estelle.
Thank you. I think it's a very interesting also issue with stablecoin, and what would be the part or the segment of cryptocurrencies then that could be substituted by CBDCs. And I definitely think we have two different segments of transactions, payments, because I think CBDCs in Africa would substitute part of the electronic money or mobile wallet. But people that are using cryptocurrencies, including stable coins, including in countries where, like Nigeria, where cryptocurrencies use is forbidden, it remains one of the major users of cryptocurrencies. Why? Because cryptocurrencies do provide a service, positive, something that public currencies issued by central banks cannot provide, and principally main reason is international regulation, financial regulation, like anti-money laundering and terrorism financing.
It's a mouthful, isn't it? Richard, do you want to add to that?
There's a question that's probably for later, but it sort of answers a little bit at the same time, which is a question from James, who's talking about surprising mentioning beyond the UK, and shouldn't we focus entirely on sort of UK domestic use? One of the reasons that I spoke so much about financial inclusion and global use of the CBDC, that could be the British pound, was because that's kind of where my expertise is, and the reason I'm personally involved in the DPF, because that's what my experience is of. So I've talked about that largely. That's not to say that as the DPF, we are focusing mainly on that. It's totally not the case. I would say it is still 99% focused on UK markets and domestic adoption. But at the same time, what we don't want to do is we don't want to get it wrong and not think wider and open our scope up to see that this could be so much bigger. If you go and have a quick look at the figures for how many US $100 bills there are in circulation and where they all are, so many of them are out of the United States, floating around the world, because the US dollar has almost become the de facto method of exchange, and the $100 bill gets used for it all the time around the world. So a CBDC would become an electronic version of that if it was trusted ultimately. So that's why I was talking about it, and that's where it can go. Doesn't mean it is where it's going to go, but good question, James, and my apologies if I made it seem like we were only focusing on that.
No
Helen,
problem.
I think what's really important is on the policy side of this is the UK government is one of the biggest issuers of money. They are also one of the biggest through tax systems and everything. This is a CBDC, and having a smart architecture around how money and value moves around the system makes tremendous sense for government. They pay an absolute premium at the moment to move money around in the economy. So creating a distributed ledger that enables people to access that information and also follow where government money is going and what it's doing. And I think we could all do a little bit more transparency in government. This is something that's really important in that design of a CBDC, because what that enables government to be able to do from a policy perspective, especially on the inclusion lenses, is huge. And also for me as somebody who wants to see where my value is going, what it is doing in my local economy, and how banks are using money. And when we think about what future sustainability looks like with money, these are all things that we can start to do with the technology and infrastructure that could be used for a CBDC. And I think this is something that's really important. And I think the technology is there now where we can, I mean, with Sophie and the amazing work that she's doing in Africa, we're proving that you can really do this in an online, offline world as well. So you don't necessarily have to have the latest Apple iPhone or Samsung phone to make this really work. This can be inclusive by design, and you can create an infrastructure in both emerging economies and economies like the UK. And yes, while 96% of our population does have access to some form of current account or payment systems at the moment, there's an innovation leap we can have here to make that faster, cheaper, quicker, and also more accessible and inclusive at the same time. And I think that's really important, that we have that engagement and discussion with people while all of this amazing work that the various bodies that are involved in this are happening, but also at the same time being smart enough to allow technology companies and fintech companies to go out and experiment and create a framework and a space for them to do this, because that was one of our biggest barriers with Aurora, was the regulatory landscape. They were looking at our wallets and solutions and saying to us, well, you're an e-money provider. And I quite simply say there, as a lawyer in that space, well, no, I'm not. All I am is following a data packet. That's all I'm doing. And I'm using the technology to show that transparency around the data. And I don't need to have a MasterCard. I don't need to be in a faster payments group to be able to do that. And so there are new ways now with this technology that we can show where that money is going and what it's doing, and allow people to use it in a different way. And I think that's really powerful.
Yeah, I think it's a point that's come up in at least one of our previous webinars, which is that this is not just about replicating what we can already do. So it's not just saying we want to be able to send a welfare payment in a digital pound, but we can add more value. You know, we can make tailored welfare payments. We can do other things. You know, we can be more sustainable. There are other value added benefits to this, not just, you know, doing the same thing we already do in a digital side. But I want to ask Sophie to chime in, because she had her hand up for a while, and I think you wanted to comment on the stablecoin point before we move to the next question.
Well, yeah, thanks very much, Helen. It's partly stablecoins. It's also actually partly about the CBDCs and the systemic importance of currencies such as the pound. I mean, if we think about you know, overseas uses of currency and where this could go, you know, the GBP is still one of the world's major reserve currencies, and you know, a lot of businesses as well as governments hold GBP, and so that point about moving it around is a really important one, certainly at a wholesale level, if not at a personal level. Then when we look down to sort of the cross-border elements in countries across Africa, of course, we get a lot of cross-border trade between small businesses who are effectively individuals, and they're having a stable coin or a CBDC, you know, that has that interoperability and that portability is really important. But one of the points I want to raise, and actually Victoria was just getting into this, is also about micropayments and the utility of these instruments, where in general, most payments are quite expensive. They don't look expensive to us in the Western world because we can afford it. But, you know, a card payment at a retailer is going to be costing the retailer 3% or more of the transaction. A mobile money payment is going to be costing between 3 and 8% of the transaction if it's over a certain level. And then actually in some countries in Africa, notably Ghana, the government has imposed a tax on mobile money transactions as well, which makes them even more expensive. One of the huge benefits of this technology is that the marginal cost is so low that actually you can do very, very small transactions, micro transactions, which can democratize a whole range of things, from, you know, music streaming to payments of welfare to, you know, whatever you want to name. And it, you know, as well as taking out the burden on the state of distributing these kinds of payments at a commercial level, it makes things much, much simpler and much, much easier. And then, you know, there is the whole consideration about the balance of money. But yeah, I mean, going back to the reserve currency thing, one of the big risks that I see in stable coins is the fact that most of them, you know, whether it's 99% or not, I'm not sure, but nearly all stable coins are US dollar denominated. And if you look at countries across Europe as well as in Africa, the risk of currency substitution is significant. And we look at countries that have already given in, like El Salvador, It's not going to happen to the UK, but if you compare the power of the GBP abroad and the euro indeed against that of the US dollar, and indeed the Chinese yuan, what's going to happen if we are behind the curve as a nation in issuing a currency that people will, governments as well as businesses will want to use as a reserve currency. And I think that from why we're talking about other countries is a really important point, because accessibility and portability, as Victoria said, is a huge consideration in which currencies governments and businesses will choose to invest in.
Yeah, a huge number of really important points there. I think.
Garbled there.
Pardon?
Garbled, but several points. Yeah.
Not at all.
I think to build on that, Helen, we have to remember we're in quite a unique position in the UK that most of our retail banking is subsidised by the money that banks have and how they use it in the corporate world. Whilst we've gone through a lovely iteration of ring fencing, in other jurisdictions, people do pay for their accounts. People do pay for transactions. In the UK, we still very much have a business model around payments and money that's subsidized by merchants and the money they pay when they have transactions, which Sophie sort of briefly mentioned. But I think that's really important, because if we are going to change the landscape and the ecosystem and the players that move into it, there's a really interesting conversation you can have around the honesty around that. And if you are going to have different people and you're going to open up that, there is something about having an honest conversation about what it costs to move money around and what you do with your money and the business models around that. Because that's, yes, I have, whether it's a Barclays or a HSBC account or a Starling account, yeah, it's free as long as I can get in and I put my balances on there. But if you're not in that luxury position of being able to get into one of those, and you end up having to be part of a credit union or in a different space because of your financial background or credit rating or stuff like that, you end up again paying a massive premium for this because you're not in that luxury club. So having a cheaper infrastructure and a different type of business model, which you can with certain types of design for retail CBDCs, that again means there is more honesty around that. And I think sometimes we often forget in the UK that the reason why we have the current account structure and things like that is because the operations of what are happening in the lending space in corporate and investment banking. And whilst, yeah, on the surface, there might be a different corporate structure, that is massively subsidizing what is happening for retail banking in the UK.
Yeah, and I think often one of the reasons perhaps, us as consumers who might not be aware of all the infrastructure that goes behind payments are skeptical about a digital pound or CBDC is that people just don't know the cost of payments and transactions. They just don't know. They think we have a digital pound already. I send money with my mobile all the time, and I can use PayPal and I can use this. So isn't that just a digital pound? In many people's minds, I can imagine that's probably one of the questions. I know that somebody had raised at the very beginning the idea that perhaps digital wallets could start to create more financial inclusion by accepting people who may have been declared bankrupt in the past and things like that. And this could be a way for them to sort of rebuild a credit history and rebuild their wealth. So I know that this is a topic that's probably, on the top of people's minds in the audience. Richard, you've got your hand up there. Did you want to come in?
All I was going to say, actually, well, one, let's answer that. So no shadow of a doubt that somebody who's been declared bankrupt should be able to get access to a CBDC wallet, because that's not a loan facility. It doesn't give them an overdraft, doesn't give them anything else as such. It's just a wallet that stores value. So you should be able to get access to that. Appreciate that if people are within a bankruptcy, they may well need to declare that and work with the authorities to ensure that it's run responsibly. But yes, that is a use case where it could reintroduce people into using this money. One of the things that I really just wanted to throw in quickly, which is a bit of a sort of a curve really, but this also can benefit people who are not using the CBDC in the UK. So one, we covered with Sophie just a moment ago, the fact that just Britain not being left behind and making sure that our currency is being adopted around the world because it's got reserve-ish status, maybe not the full reserve status that the US dollar has, but certainly is one of the big ones. Let's not also forget that you're also giving real-time feedback on the use of money to the Bank of England that it's never, ever had. So this vast, if we're talking about retail use as well as corporate and intra-bank use, you've got data that's going back to the Bank of England that they haven't known before. They don't know what people are doing with the money until quite a long time afterwards when reports would be created. Now, at the moment, we're living in not unprecedented, but fairly high inflationary terms around the world. I'm sure this will all be fobbed off and blamed on conflicts and everything else. But the reality of those things is that we also printed vast quantities of money. The United States, Britain, Europe, we just kept printing the money because it seemed to be working. If we'd have had greater granularity on the data of where that was ending up and how it was being utilized, we may well have put the brakes on sooner, and we may well have averted what will be now a period of painful inflation. So I think everybody will benefit from this in ways that are almost invisible.
I would just add to Richard's point, and I think building on a point Victoria made earlier, that the digital wallets, everyone should have access to a CBDC and a digital wallet. But that hopefully will give people, and this depends on the policy choices implemented, access to a wider range of financial services providers than they can access today. And it's presumably in that piece of it that hopefully you would get more flexibility, not providers that take on undue risk, but providers who, unlike the commercial banks, can tailor their products to those dealing with something like bankruptcy ramifications. And that is how I think you also get to a more inclusive financial state, just widening the range of actors who can participate in terms of offering services to citizens. I think also, and this point has been raised throughout the discussion, you don't want to have walled gardens in any one jurisdiction. That's why the policy collaboration is important globally, to ensure that people, or countries, I should say, aren't building currencies that can only be used domestically. Ultimately, we are an interconnected global system. You want these things to be able to interoperate, and in terms of costs, cross-border money services, which is where Ripple focuses a lot of its attention. This is exactly the sort of area where CBDC, digital money, can have a real impact. You want that currency to be able to flow cross-border and interact with financial services abroad. So I think ultimately this conversation, while focused domestically initially, it has to be a global one.
Absolutely. And if you didn't come to it, we did do a webinar a couple of months back on cross-border transactions, which I think is now on YouTube. So if you missed it and you're interested in that topic, go to the DPF YouTube channel and you can find that there. Estelle, I know you had your hand up. Did you want to respond to what Susan's just said, or another point?
Yeah, I just wanted to rebound on this, and the geopolitical aspects of building CBDC is also, I think, compliant with the willing of the European authorities more generally to have European system instead of payment system, electronic payment system, instead of relying on international schemes, because majority of electronic payments are made by card. As we know, card schemes are from the US or China as UnionPay. And the European authorities wanted to promote a European solution with the instant payment and the EPI initiative, which obviously doesn't go very, very well. And I guess that building a digital currency could be a solution as with, I guess, no interchange fees. And so it could be a local or a national or domestic scheme to provide electronic transactions. So I think it also responds to this willing of the authorities in our regions.
Indeed, yeah. I mean, one of the questions that's been coming up quite a bit as a theme to maybe just cover before we finish is, with all of the innovation that is going on in the private sector on this, why should we sort of waste time on governments designing these central bank digital currencies? Couldn't we just have new forms of, privately issued money and, not sort of wait for the slow, cumbersome wheels of government to churn around and come up with their own version, which might take a really long time. So we'd love to just hear people's thoughts on that. I know we've spoken already about trust, and the point you made was relevant about that as well. But shouldn't we just, let private stablecoins take over rather than having a CBDC? Anyone want to stick their hand up for that one? Richard?
I mean, I think the fact that we've seen such calamitous crashes within within stablecoins, and I know you did mention trust on the way into this question. Trust is the most critical part of it, but like I said, there's loads and loads of other facets to this that go beyond just a tool that works within the crypto industry to allow people to jump in and out of crypto trades. And that's kind of where the stablecoin industry is at the moment. Let's not forget that the ordinary individual people would be using this to make payments. I don't think anybody uses a stablecoin at the moment to make payments for anything. They're mostly held for crypto trading. So I think it's a completely different thing, but that doesn't mean that this wouldn't also work well in that environment. Because if you had got Bitcoin that you wanted to trade, why would you not be, if you're jumping into pounds and you could jump that into your own wallet for safekeeping, that'd be much better than leaving it as a pound value on an exchange. So I think this will work in both the ordinary environment of consumers, the commercial environment, as well as crypto trading and everything else. It covers stablecoins better than existing stablecoins.
Yeah, and maybe just the last question, since we've only got a few minutes left, if perhaps each of you could just make a short comment on, what do you think is the real goal of CBDC when it comes to financial inclusion? What is distinctive about it? Perhaps how can it interact with other digital services that we haven't mentioned that would make it significantly better or different than what we have today? Can I start with you, Sophie, since you're on my top left-hand corner of the screen?
So I think we've used the word a few times, but interoperability is key. I can see a world where CBDCs and stablecoins interact and are used for different purposes within the same economy. I think we'll see it probably more in my domain than in the UK, but I can see a place for it, particularly when you've got large-scale commercial coins coming out and US dollars, etc. So interoperability, I would say, is key for any CBDC, and that I think will promote widespread financial inclusion.
Thank you very much. Susan?
I think Sophie said it well. I think part of the goal, you need well-designed policy paired with, I think that digital penetration and financial literacy, if you can achieve those, I think you're going to get much more financial inclusion, a higher rate of financial inclusion than you do today, given that you'll have a wider range of people able to participate in the system, hopefully a wider range of actors offering services than you have today with traditional commercial banks.
Thank you. Victoria?
I think for me, if we could, with CBDCs, we could actually in the UK remove the poverty premium that's there right now really quickly. I think stablecoins can be a bridge for that, and we can have experiments while we figure out how we eventually get to a nice Bank of England backed full on all singing all dancing CBDC. I also think CBDCs give us, much like when we went into new money, so we can have a whole different way of thinking about financial literacy and financial education in the UK. So people really understand what money is, what banks do, what good financial health looks like, and what that can do. Because if we have to think about launching a CBDC and educating people about that and all of that, that's an opportunity to do something really, really good for people in the UK. I know when I went to school, nobody ever talked to me about banking. And here I am, I've worked 10 years inside a bank. Might have been useful to have a bit of education on what banks were. and what that whole economic space can look like. That for me is what I think the potential is here.
Incredibly important. Yes, I completely agree. I'll come to you next, Estelle.
I fully agree, and just wanted to say that financial inclusion is it's not only about financial inclusion with digital, and technology is just a tool. And what is very important is to make sure that people benefit from the solution. So it's stable coins, CBDCs are not the panacea, and they are one key elements or one interesting element, but not addressing everyone everywhere. And diagnosis of the needs are really key, very important to make sure that it addresses the right people.
Thank you. And Richard, finally.
I mean, I agree with everything that's just been said. So not too much to cover, except to say perhaps we talk about this regulatory environment as if that is a regulatory environment that somebody controls. But of course, every single nation on earth has got their own regulatory environment. It's very easy for Europe. I say very easy, it's not easy at all. Europe have got their own way of developing a regulatory environment, United States, Great Britain, etc. So part of that learning and that training and that the good examples, I think also needs to be pushed out into the countries that operate within the developing world, because those countries need to see this as a positive thing so that they can build their own regulatory framework to allow their citizens to use it. So that is also going to be quite critical to it actually gaining traction.
Agreed. I'm afraid we've come to the end of our time. I know there were a lot of questions we didn't get to. I hope we got to at least some of them during the discussion. For me, it was fascinating. I think, there's a number of different important elements to remember. One is that we all deserve to be included in the financial system. We all deserve to have access to these services. And it's important that governments and policymakers and businesses do their best to make sure that everybody can take part, and also that we will all benefit from that. The more people we have involved in the financial system, we're going to become wealthier, we're going to have access to more people's skills and more people's talents, and people are going to be able to use their money in the best way and actually take advantage of all of these digital benefits that we're now starting to see. Many opportunities in blockchain. Richard mentioned just one of them, but there's all sorts of other opportunities for people to generate wealth through their own skills, through their own time, through their own opinions, through their own inputs, which haven't really existed before. So thank you to everyone who's joined. Thank you to all the attendees for asking such great questions. We will be circulating the video afterwards for anyone who missed it, so keep an eye on that. And if you have further questions, there's a lot of material on the Digital Pound Foundation website. Join the mailing list, come to future events, and we look forward to seeing all of you there. Thank you very much for joining us.